All right. Once again, good evening, everyone. And once again, welcome to the 11th webinar Market Outlook and Stocks to Watch with the legendary in the stock market, Mr. Fred Tam. How are you guys, everyone? Okay, now if you guys can hear us, what we're going to do is we're going to do a quick test right here. If you guys can hear us and watch us, just type yes on the chat box down there and tell where you're listening right now. Are you listening from KK, from Johor Bahru, from Penang, from Kuala Lumpur? Just right down there, and we want to see where you all listening to us right now. Okay, now we have Sufarman now from Korea is listening to us. How are you? Annyeonghaseyo, Sufarman, all the way from Korea right now. Malaysian now, but working in Korea. Okay, now guys, can you hear us? If yes, you can just type yes, and let me hear right now. Linda from Penang. Asira from Kota Kinabalu, Casey Lee, Chris Wong from Penang. We have Aswad Rizwan from JB, Julius from KL, Ashikin from Shalan, YK Kian from Kuala Lumpur, Tan from KL, Dennis Teh from Kajang, Badrul Hisham Bidin from Bukit Beruntung. Jimmy. All right, once again, everybody. Once again, everybody, welcome to the 11th webinar and a market outlook and stocks to watch. And today, Mr. Fred, looking great today, huh?
Thank you very much, Zon.
Okay, so without further ado, I think Mr. Fred, you're ready to give the market outlook for this coming today.
Yeah, hi everybody. My name is Fred Tam, and I am the founder of F1 Academy. Welcome all of you to our 11th webinar series.
Yep.
The contents of my talk tonight are as follows. I shall share with you my KLSE outlook for June, the month of June. Number two, I shall also share with you how does one spot a trend change from down to up and from up to down. It is important that as investors, we know when the market or your stocks are changing. Number three, I'd like to share with you about our general election stocks. Are they still rallying or it's fizzling out? Point number four, I shall share with you also the 10-year bear cycle. Okay, it is important that at this point we know about this cycle. And lastly, there are still some good stocks to watch. So I hope that you will stay with us until the end of today's this evening's talk. Okay, let's get on with it. Now, before I start, I like to read our disclaimer. We are obliged to tell you that this presentation is only for educational purposes and should not be construed as a solicitation to buy or sell stocks, futures, or other instruments mentioned herein. Investment in financial markets involves risks of loss, and professional advice should be sought before investing. Okay, having now said that, let's get on with tonight's presentation. I'd like to bring you all back to memory lane, way back to December 2016. Some of you may not even have started trading because I see some newbies in our group, but some of you are already there trading since last December. For those of you who have been trading since last December, you will agree with me that it is very sleepy. Okay, the market was not going anywhere.
Right.
I did a same webinar in December 2016, and here is what I said in that seminar. So this particular chart, okay, is in reference to the seminar that I did on the 30th of December 2016, and I said that our KLSE was bearish. Actually, it was very bearish compared to now, really. So those of you who think that now is bad, you should have seen KLCI during in December 2016, even worse. And I gave my outlook based on 4 technical analysis indicators, and they are chart patterns, moving averages, momentum, and Elliott wave. So let's look at it from the chart pattern point of view. Okay, and as at 30th December 2016. I say it was bearish at that time, and it was bearish because of the following reasons. Number one, it was in a descending channel. Okay, in the descending channel is where you have lower low and lower highs. 4 is lower than 2 and 0.3 is lower than 1. and that makes it's in a bearish trend. Number two, I also noticed that the index was below its 50-day moving average, 100-day moving average, and 200-day moving average, and we use the exponential moving average. For those of you who know that moving averages, you know that if the index or the price of a stock is below the averages, that means they are bearish. And so in this case, as at 30th December last year, it was all bearish, all below the three moving averages. Thirdly, the momentum was below zero, okay, as you can see right at the bottom right, so it is bearish. As well, the Elliott wave count, okay, and in Elliott there are 5 waves. There are 5 waves up if it is bullish, or 5 waves down if it is bearish. In this case, it was 5 waves down. So that's wave 1. If that's wave 1 down, wave 2 was considered a rebound, wave 3 was a down, wave 4 was a rebound, then we would have expected wave 5 it to come down, and it did. It come down to test a double bottom at 1612. Now, but this is the funny thing that happened after 30th December 2016. I'll show you the next slide. Our KLSE trend changed since January the 5th this year. So how do we spot a trend change? It's very important. Okay, it's hard for one to find out looking at the news because the news will still be bearish. But already the smart money, the fund managers, the jurors, they are really starting to buy. And when they all buy more than they sell, prices rise. And the first indication of a trend change is where it broke through this red color line. And that's called a supply line or resistance. So step number 1, look for a break of the supply line, which is the resistance line. And if it did, it rallies to H1, don't you expect, look for a pullback, okay? And if they do pull back, the low should not be lower than the old low. It's very important. There will be a pullback because after all the buying, some of them will take a profit. And that pullback is important that it failed to retest the low. That is the second point in a trend change. And when it does U-turn back up, look for it to break H1. That is a very important point as well. Because if it breaks H1, that means H2 is higher than H1. We got a higher high and a higher low. And this confirms, okay, or conclude the trend has changed. And that's the point where we can enter into the market. And the point to enter is actually when it breaks H1, which is around this area. Number 4, the buy signal comes here. And that's how we spot a trend change from down to up. And let's look at the KLCI. Okay. And if you apply this to the KLCI, this will be the resistance or a supply line. And at this point, which is on the 5th of January this year, the index CI broke through the supply line or the resistance line. This is the first indication of a trend change. The second indication of a trend change is after rallying to H1, it pulled back. It pulled back, okay, for a failed retest of the low. The pullback failed to break below 0.2. That's called a failed retest. Okay, if it can retest the low and exceed low, no good. But it didn't. And you turn back up again, and in this case, it make a higher high. H2 is higher than H1. That confirms a trend change to the upside. And that's how we were able to catch this U-turn way back in about January, February, that time, around the 1700 area. In fact, when it break through 1700, that's the buy signal. And we call a buy. I think it was in the February talks. We were on the road show then, and already we are already calling a buy. When the news is still uncertain and so on, but we are chartists, so we look at the charts, and the charts already have confirmed a trend change. All right, and so I was right. On a subsequent webinar on the 19th of April, which is my 9th webinar series, the KLCI already has shot up to 1733 from 1700. And at that time, okay, here was my technical argument in favor of a bullish KLCI. I also use charts. I use moving averages, chart patterns, moving averages, and Elliott wave to forecast the CI at that time, which was now on the 19th of April this year. First, there I saw a double bottom, a W bottom, as you all can see here. Those of you who have been in my studios will know that this is what we call a double bottom, right? Now, very important that the double bottom, it must be supported by a strong support, which is 1614. It didn't break through and it U-turned back up. So the first resistance that it broke was the 1651, which is over here. And that is already triggering a bullish move. Then the second resistance was 1700, which it also broke over here and which we call a buy based on the trend change method. And based on the moving average, notice that this, even at this point, okay, around the January, February area, already the price of the index is above 50, above 100, above 200, which indicates bullishness. Right? So it is we have chart patterns, reversal, bullish reversal up, confirmed by a breakout of the resistances, confirmed by the moving averages. And lastly, the Elliott wave was also bullish then. It was trending then in a 1, 2, 3, 4, 5 wave up. Now, so here is the Elliott wave count. Wave 1 is a rebound. Wave 2 is a pullback. Wave 3, this is a very strong rally right up to the 1760, 70, and then pullback and landed there at 1733 at the time when I did that forecast. And if you all do remember, around the 14th of April of this year, what happened in North Korea? The North Koreans shot a bomb, a rocket up to space, and they threatened America. And we expected, a lot of us expected the market to go down, but the market didn't go down because from that point, it rallied instead of going down. That shows how unimportant news are, okay? And so it was on this 19th of April that I said that it's going to go up further, okay? In spite of the North Korean incident. How high is it going to go? Wave 5. So after wave 4, there's going to be a wave 5. Those of you who knows about Elliott wave. So what was my wave 5 target? And I'll show you the next slide. Here is my wave 5 target. And mind you, these KLCI immediate targets is not today's forecast. It was a chart that I drew on the 19th of April. And I said then, when the CI was 1733, I said that the first wave 5 target is going to be at 1816. And my measurement is as follows. You take the distance from the bottom of wave 1, which is wave 0, right to the top of wave 3. If that is X, then you pack it to you pack it to 4, okay, and you measure a 0.618 of it is 1.618. That's my first target. And if it does exceed 1816, the next target is a 1 to 1, which is 1871. And I did a forecast in my 19th of April webinar. And today, I still stand by this. So to answer the first question, which is what is my KLSE outlook for the month of June, which is also second quarter, it will be these same two targets, 1816 and 1871. Yes, today we saw the index pulling back 5 points. However, it is still in a bullish channel. As for the other stocks, I will let you know later on, my view about the other sub-indexes, like the ACE index, like the small cap index, like the mid cap, small cap index, all technology index, all the other indexes, are they trending in the same direction and the same strength as the CI? We will know later after this.
Interesting.
So let me just share with you the next slide, which is my forecast for the second Q. Second Q ends on the 30th of June. Still, we got about 3 weeks to go. And this is my forecast for the second Q, which is similar to that of 19th of April 17, which is, as you can see here on the PowerPoint, the first target being 1816 and 1871. If you are of the same view as me, then obviously it's good to be buying index-linked stocks and buying the futures contract. Okay. Of course, we need to put a stop loss in case the market does the unexpected and pull back. At some point, we need to cut the loss.
Yes.
And the answer is 1746 because that will be our 50 EMA, exponential moving average support. So until it breaks 1746, just stay cool. We expect the CI to be on an uptrend. And interesting, yeah?
Interesting. This is what everyone wants to know.
Yeah. But so which index stocks are good? Because not all index stocks are going up this round. There are only a few. And through our system, TAD, we are able to spot, filter out those stocks that are uptrending. I'll explain to you all a little bit how we pick winning stocks. So here I'm showing a picture of North Korea during the inauguration day of their daddy, their granddaddy. And it was at 1733. Everybody was so worried. But look, it continued to go up. And the reason why is it's already predicted in the charts in the sense that the pullback then was a wave fall. And in an Elliott wave, there must be 5 waves to complete the sequence, which is the 5th. And it is now traveling on the 5th. And I know what question you're going to ask me the next. After this, is it going to correct? The answer is, based on Elliott wave, yes, it's going to correct. When is that going to happen? I really don't know yet. Okay, let Mr. Market tells us. The market will know. And when they tell us that they're going to correct, they broke a major support line, and we call it a demand line. All right, and a major support, then and a moving average, we are going to exit. And I'll explain to you how we do that. How to spot a trend change from now up to down. Just now was down to up. All right, so I've completed the first part of my questions that I want to address tonight, and that is the forecast for the second Q.
Right.
So let's come to topic number 2. I would like to share with all of you how to spot a trend change.
Right.
Okay, trend change from down to up, which I shared with you already. So I'm going to show you the same slide from down to up. Okay, I explained to you how we did that. First, a break of the supply line, and then rally, pull back, and the failed retest of the low. It makes a U-turn, it breaks through an old high to make a higher high. That's the buy signal, and that's down to up. But now our market is on the way up. Now, what if it comes down?
Interesting.
How do you know it's turning the corner? This same diagram, if I turn it upside down, I rotate it 90 degrees, right? 180 degrees, then I will get the other side. So I'm going to show you. But before that, I show you how to apply this example, this diagram to trade Maybank. Now, I spotted this chart long ago. It's not that I draw this right now. Okay, I'm going to show you the same 3 steps. Step number 1, the break of the supply line was at this point. You do nothing. Before that, from May to June last year, you cannot blame Maybank at all. Maybank dropped from 920 down to 740. 920 to 740, then bounced. So when it broke the supply line, to me, that is the first indication of a trend change from down to up. But it's not a time to buy yet. And very unlikely you see a stock rallying back up like that. It has to pull back a little bit due to profit taking, and then they will congest here for a little while before the selling is absorbed and new fundamentals takes place, and the Jurongs push back up again to make a higher high and a higher low. And this is the point to consider. So the second point is look for a retest of the low, but a failed retest. So the retest stopped at L1. It didn't go below here. Let's consider that L0. It didn't go below L0. And from L1, it continued to rally. And this is an important point. It make a higher high and a higher low. That tells us that the trend has changed now from down to up. Now, let's complete this with a fourth, which is a buy signal, which is at 8.08 when it broke through what we call a resistance or supply line here. All right, at H1, that's a buy. And guess what? If we did that today, or based on the 5th of June, okay, 2 days ago, Maybank was at 959. If you bought at 808, sold it, or you hold it, and you're at 959, how much do you make? You make 18.68%.
That's
okay,
beautiful.
for a blue chip is fantastic.
It's fantastic.
Talking about putting the money in the bank at
Yeah.
4%, or even the mutual fund that give you 8% or 10%, all right, or EPF they give you 7% per annum. This is like 18%, okay, in 6 months.
Interesting.
Okay. So what is my secret in picking Maybank? I like to share with all of you. It's not difficult. Just looking at the chart, I didn't look at the balance sheet of Maybank. If you look at it, you wouldn't be buying because it's not making that much money. Now, don't trade here because why? It is in a downtrend. You cannot make money in a stock when it is in a downtrend. You just stay out, stay out. Now, then it went sideways. You also cannot do any trade profitably when it is in the sideways. It is best to stay out. Okay. So when you trade, when it is in an uptrend, and I consider this on the right hand side, the uptrend, and I use a break of the supply line, the resistance, to indicate that it is in an uptrend. Once it make a higher high and a higher low, then the trend has changed from down and up. See, it gets so technical, and in technical analysis, it's so definite. You can define an uptrend much easily and accurately than that of fundamentals. And I have nothing against fundamentals. Fundamental analysis is great to tell you what to buy, but technical analysis tells you when. When you combine the two, it is absolutely ideal and very balanced. Come back to this. So that's how we trade Maybank. So now, and to help us to determine the stocks in an uptrend, now we use a TAD, which is Total Atom and Duct, the computerized system, to help us filter out the stocks. There are 1,700 over stocks.
A lot.
Okay? So how can we do it manually and flip and look for higher high, higher low? So the alternative way is use TAD.
System.
And
Screen
I
assistant.
believe that those of you who are our TAD users, okay, you will know what I'm saying. You're probably even using this filter and scanner. Okay, and this scanner it does the job within less than a minute, and you get the list of stocks that you're gonna buy. After, if you got time, I will do some scanning and show you how exactly we're able to pick uptrending stocks. There's no secret into that.
Okay.
Now coming back, what about the other way around? What if now our stocks are rising, but you see some are very shaky and they are about to fall? How do you know really that they have fallen and time to get out? You know when to buy, you must know when to sell. But you cannot sell too early, otherwise you get out too early and then it continue to rebound and you don't know how to get back in. So what is that point below which you get out? So that here I'm going to share with you. Now I'm going to show you the diagram that is entirely the opposite of just now. Just now was going down and then rebounding. This one is different. It's going up first, step number one, and it breaks a demand line. This is a demand or a support line. First step to spot a downtrend is that it breaks the support line or the demand. That's the first indication of a trend change. And normally after a fall, they don't fall immediately, they will rebound. All right. And when they rebound, you look for where it ends, which is H1. And then if it comes down, then it's not a good sign. So the step two you got to look for is that on the rebound, the failed retest of the high. So when it bounced back to H1, it failed to break the old high, which is H0. It's not written here, but assuming that it's H0. So you've got a lower high. That's already a weakness. But it's not confirmed bearish until it breaks the support line, which is L1 over here. Because when it breaks L1, then you have got L2 lower than L1, and you got H2 lower than H1. That is a definition of a downtrend. And so the point to get out is below L1, which is over here. I already marked it. That's your sell signal. Okay, so that is one way to spot a trend change, and that you should reduce position in your stocks, even if you don't want to get out all of it. Another way to spot a trend change is to use a moving average. So I'm going to show you this green line is a moving average. Now, when the price of the stock is bullish, the price will be above the moving average. But when the market or the stock turns down, then price at some point will fall below a moving average. That's the first indication of a trend change. So in this example, it is here, over here. You see, the price breaks the moving average, it's bearish. If it breaks through the 50, it is short-term bearish. If it breaks 100, it is medium-term bearish. If it breaks the 200, it's corner. Okay, it's long-term bearish. And you notice this round, many of them, they hit the 50. Some fell below the 50. I admit it. So short-term, they're bearish. Some of it, and not all. But it didn't go through and break the 100 and the 200. So we are still there. So we also need to separate between what we call a short-term trader and a long-term investor. Yeah. So for example, Air Asia, on the short term, it would have broken through the 50 moving average. But if you are a long-term investor, it's still a hope because the weekly charts didn't break through the low support yet. So let's come back to this. That's how to spot a trend change from up to down. Okay. Now we don't have that scenario yet, so I'll just go back to the uptrend. So insofar as the KLCI is concerned, okay, based on asset, yesterday the trend is still up, and this chart was drawn based on yesterday's close, and one major reason is because it's above the 50 EMA. Let me just show you where the 50 moving average is. This blue line is the 50 moving average. Notice that the CI is above the moving average. That means bullish. Okay, now, those of you who have this software by SI Station, right, you notice that we gave you these indicators. And the indicator below, it's called F1 DAX. The DAX is basically the 50 exponential moving average, but it is drawn as an oscillator, okay, underneath the chart instead of on the chart. So our conventional way is we draw a moving average on price chart, which we did that, okay. But to help you out, because we want to put arrows, okay, to indicate whether the price is above moving average, then we have an up arrow. But if the price is below moving average, we have a down arrow. In order to put the arrow, we cannot put it on the price chart because the arrow there is reserved for turtle. So to plot, okay, another arrow, we need to put it underneath the chart. Hence, that's why we draw the moving average as an oscillator underneath the chart. And as you can see, up to today, and it started from 5th of January 2017 this year. See, our CI has been bullish since this date, which is the 5th of January. So this is the same time it broke the supply line. They all coincide. How fantastic. So my argument right now, technically speaking, is the KLCI is bullish because it is above the 50 EMA. Number two, based on chart patterns, it is on the way up, okay? It's trending in an up channel as represented by the blue lines, as well as you have an uptrend there, okay? And of course, yesterday it hit the old high, and today it pulled back 5 points, but it's still within this, okay, uptrend channel. So it's a whole based on what happened as at today's close. What about the ACE index? The ACE index, okay, consists of small cap companies of the MSC status, and mostly are tech companies, tech stocks, yeah. And in fact, this group of stocks have been very active, and they have gone up, in fact, faster than the CI. Now, how do the charts view this category of stocks? My answer is, based on the chart, it's still up. Why? Because first reason, price is above moving average, or the index. Here, the index was here. It's above the moving average. The moving average is the blue color line, and it didn't go below. Okay, but this is weaker than the CI in the sense that, you see, notice this pullback, very sharp pullback over the last 14 days. In fact, 1 month since the beginning of May. So the pullback is a little bit more severe than the CI stocks, but nonetheless, it is still positive because number one, it's above the 50 EMA. Number two, is still above. You see this blue horizontal line? That's called a support at 6067. That's the index of the ACE. So until it goes below 6067, okay, ACE index stocks are still considered up. But just be cautious about it because it did not reach the old high, whereas the CI would have already reached here. The equivalent of the CI is here. So this round, the CI stocks are playing catching up. But only a few, and after I'll name a few of them. They are in our stocks to watch. Coming back to the ACE index, it's up but cautious. What about another category of stocks? Okay, we are worried about this breaking into a new low. That see this lower high and lower low, and that's also an indication of a trend change. But here we haven't had that yet. That's why I put it in the form of a dotted line. Next, small cap index. Now notice this index, okay, is similar to ACE index. Now ACE index, many of them are small caps. All right. So the small cap index actually is a reflection of the ACE index. But notice the small cap index, when did it started the bull run? Since December last year, already started the run. Okay, run. There is no sell signal until here. So there is a bit of reason to worry about if you're holding on to the small cap stocks, because the small cap stocks this round pull back, okay, a little bit more severe. And in this chart, okay, which is a small cap index, it did show that there is a 3 arrow down, okay, the turtle arrow down, the atom arrow down, and the duck arrow down. But thank God it made a rebound, and the duck arrow turned back up again, okay, and it is now above 17,146, which is the support, which is the area around the last level. And so until it dropped below this blue horizontal line, then only we worry. Okay, then worry. So we for small cap stocks, we need to be very, very particular and watch out. So far, it is still above the 50 EMA, so it's still bullish. So the bull run in the small cap started around December the 29th last year, but because it made a lower high, it should not make a lower low. If it does make a lower low, that's the time to take precautionary defensive action and reduce positions and even cut your losses. Okay, but each individual stock is different, so we got to look at your stock to determine whether it has gone below the old low. Some of the small cap stocks, and many of them are still very strong. As you can see, JHM is a small cap stock. It's an A stock, but it's doing so well. That's just to give an example. GNX is another one, and so on and so forth. So technology index, in my view, is the strongest of the subsectors. And why is it strongest? You see, notice, number one, the index is above the 50 EMA. Number two, okay, and it started this bull run on the January the 4th. It's about the same time as the index stocks. And this is strong. I notice how it's nearly testing the old high. Okay, technology stocks. Now, why is this stronger than the rest of the stocks? One possible reason is because of NASDAQ. NASDAQ has made a new record. Okay, 6,300 points. Okay, and so that has a major influence on our technology sector. So what constitutes technology index? It is available in SI station as part of the sector stocks. Okay, and you can see from this diagram that it is trending upwards. So we're looking for a break of 34.83, and if it does and move higher, then technology stocks will indeed be technically strong. And of late, okay, which is on the 26th of May, the Security Commission and the BURSA Malaysia, they launched a new index. It is called the Mid Cap Small Cap Index, MIDS Index. Okay, and so this index tracks 100 stocks of the small and the mid caps. And the Malaysian government actually is spending about 3 billion ringgit to invest in these stocks. And so 22 brokerage houses are are giving they are giving this category of stocks coverage, which previously is not being covered. And so with the coverage by the brokers, then more and more people are going to know that the quality of these stocks, many of which are actually very profitable stocks. But because they are under research, okay, they are under marketed, they are under promoted, people don't know about it, and therefore their value, they are not reflecting their true value. They are not in fact reflecting the intrinsic and the fair value. So that's why the government is now putting a lot of effort, 3 billion worth of effort to put in to help to get these stocks more recognized. So these stocks will definitely be a category of stocks to watch. Now, the good thing is we are tracking these stocks
All the time.
Yeah.
All the
We
time.
have got this in these 100 stocks, and I'll show you what they are. These are the 100 stocks. We have key in all these stocks into our SI station, which you can do the same. It's very easy. We can help you to create a portfolio. Just put the MIDS stocks and 100 of them. Every day you track them. Okay. Now, they definitely are fundamentally quite good. Some are better than the others, but they have some fundamentals. If not, the SC Security Commission and BURSA won't include them into the 100 stock. Okay, but the timing, when to buy, is purely technical. That's where we come in. We use a TAD scanner and we scan through these 100 stocks. Those that give us a technical buy, we will look into the chart. Okay, technically is a buy, and fundamentally we know that it's good.
It's covered.
It's because it is covered by them.
Yep, done already.
I give you an example. I'll show you something where you combine fundamental analysis and technical analysis, and that can give you a better buy, more balanced buy, more confidence to buy, that sort of thing. Now look at this. This is a report of YSP SAH. YSP Southeast Asia. It is a health stock, and it was covered by Affin Huang. Now this report came out on the 25th of May. Okay, that it is a very good stock. It's a buy, and at 238 at the time. And what is the target? Is 276. Okay, that is the fundamental. What about the technical? Guess what? That's where we come in. I'll show you our chart, our TAD, how it caught this buy today, just today. Although this report came out on 25th of May, it never went up and it never broke through any resistance until today. Now I want you all to look at this chart. On the left, you have a weekly chart of YSP SAH. Weekly chart tells us the long-term trend. Okay, and on the right is a daily chart of YSP SAH, which tells us the short term. So we have the long and the short term. Let's look at the long term. Okay, before we buy, we must make sure the long-term trend is up. And how do we know it is up? We use 3 arrows pointing up. This is the first arrow. That's called the turtle arrow. If it's pointing up, that means turtle is bullish on this stock. Then we move down to atom. Atom also show if there's an up arrow, it tells you that it is also bullish from the atom point of view. And lastly, the DAX is also telling you, okay, there is an up arrow. That means turtle, atom, and DAX on the weekly chart is saying up, which is very, very powerful. Okay, hold on a second. Yeah? Okay, let me just go backwards. Now, so the weekly chart is uptrend. Then let's move on to daily. Daily chart. Guess what? What did we see today? Breakout. Now, 25th of May was here. There was really no signal until today. So you're not really late. Okay, not really late. So meaning tomorrow should be a continuation of the breakout, and the volume clock today is pretty high, relatively high. But over the past 1 month, 1.5 months, look at the volume that are packed into this stock. And is it any coincidence that it is covered by? Does it? Maybe it's not. Okay, but did they help in pushing this stock up? You bet. Okay, and it did help because a lot more people are now they know about this stock because of this coverage by Affin Huang. Okay, and we see this on some forums. But you might say everybody know already. I don't think so, because if everybody know already, it should be right at the top there. right on top there, but it's not there. So it's just a beginning. Now, what is
Yes,
my
sure.
measurement from the chart point of view? The target, it is not 276. 276 is based on the fundamental viewpoint. 276 is based on the fundamental viewpoint. I do respect their view, but our technical view is that of 290 and 346.
Interesting.
Now, and there's too much for me to tell you how I arrive at it. If you want to know, then obviously
Get it,
you get one of these books. Get the TAD system,
Get the
or come to our courses. Right now, let's move on. So this tells you the importance of actually looking at the MIDS scheme stocks, which the Security Commission and the BURSA has launched, because they will be revalued. So summarizing the first part of my talk, what is my conclusion is that number one, I believe that the KLCI is technically strong still, okay, but be very selective because not all index stocks are strong.
Okay.
Number two, I believe that the technology, the small caps, the A's, they are still uptrending, but be careful of a trend reversal because they are making a lower high. If they make a lower low, which they haven't done yet, but if they do, then we should start to reduce position.
Yeah.
Number three, know how to spot a trend change from down to up, which I just shared with you all, and from up to down.
That's interesting.
Okay, that's interesting. The lower high and the lower low,
Sure.
and the break of a support. And the
Yes.
other way is the break of a moving average, a 50 moving average. That's how do we spot a trend change. Number four, then we should also know as a trader how to take the profits and reduce position if the trend has changed, or cut your losses. Okay, many of us, we know how to buy, when to buy, but we don't know when to sell,
Yes.
when
This
we
is
are
like-
right, or when to sell when we are wrong.
It's true.
Number five, and last but not least, the MIDS, the mid cap and the small cap stocks, they are really potentially good. Track them, monitor them, but don't go and just blindly buy them until they are in an uptrend. An uptrend, our TAD system will define an uptrend for you. If the three arrows are pointing up, that means it's uptrend. So you will notice here that as a chartist, all we talk about is the trend. All we are concerned about is the trend. It's all about trends. And our secret of making the money on picking winning stocks is to pick stocks in an uptrend. Okay, no downtrend. Get out of sideways trend. Stay out until, and you only buy when it is uptrend. Let's go to the third section. I'd like to share with you. There is some disappointment that the GE14 stocks that so many brokers, including we list, they're not going anywhere. So is this fizzling out? Okay, is there really an election this year, or there isn't? Maybe next year. Okay, look, let's look at the GE 14 stocks now. So I'm going to show you a list of GE election stocks. So these are the list of GE election stocks that I already listed down in the January issue of this webinar. Even in the January talks, I already talked about the GE14 play. Now at that time, there were 10 stocks that are in an uptrend, okay, out of about 30 stocks here. And then note that on the in April, it shot up to 26 having buy signals in an uptrend. So there was really an increase, a twofold increase in the number of stocks in an uptrend. Okay, so we were all upbeat that an election is around the corner. Okay, and many of the stocks that we picked actually make money. Okay, are in an uptrend. But I did a scan yesterday, and guess what? It has decreased to only 8 in for the uptrend. So it's even worse than in January. So I would say you got to be really, really careful about election stocks, play stocks. Many of them are not even moving, and so that's where your charts come in. And if they're not moving, just get out and stay out. Now I'll tell you what is still moving, and it is up. They are all in green color with up, up, and up. So the first one is Bousted. It's still up. The second one, which is very strong up, is CIMB. Notice the banks are well bought up this round. Okay, Maybank is another one. This is CIMB. Now DRB Highcom, ever since they sold off Proton, okay, 50% around there to Geely. So there has been demand for this stock. So DRB, although it's very volatile, but it's still up. But not MRCB, and that is what I meant by you got to be very careful when choosing which index stocks. Not all index stocks are strong. Okay, Genting is up, but today fell a little bit, but still in a sideways to uptrend. The airport is fantastic. It's going up the roof. Okay, why is it so? Probably because of e-commerce. Okay, from the Jack Ma Group coming to Malaysia, and we're using Malaysia as a hub. Okay, logistic hub. So airport is one of them, and it shows up in the chart. The other one is MyEG. Okay, and then Heng Yuan,
Shell.
Syme, and that's about it. So really, I would say that there are more good stocks in other sectors than in the general election 14 play.
Right.
After in my stocks to watch, I'll give you some of the stocks. Let's move on to the next one, which is the fourth item. And I would like to share with you about the 10-year cycle. I don't know how many of you have heard this before, okay, about this cycle charts, yeah. But markets do move up and down in cycles, okay. So there is a major 3-year cycle, okay. There is a 10-year cycle. There is a 54-year-old contra-type cycle. So there are many cycles of different length, but the 10-year cycle stands out as being the most prominent bull and bear cycle that we need to understand as traders, as investors. It may or may not come true at exactly 10, but it's good to be careful. Now, what does the 10-year bear cycle say about having to be cautious in our market? Is this. Now, I'm going to show you a CI chart, a 30-year CI chart, and from 1986 to today. And we notice that every 10 years, there is a major drop in our markets. The first drop that I recorded was 1987. And that came in the form of a Wall Street crash, okay, October crash of 1987. And that was a first of the downtrend. And 10 years later, in 1997, guess what happened to Malaysia? We have the Asian financial crisis, which is exactly 10 years from 1987. And this crisis, the drop was so sharp, okay, and it wiped out a lot of capital. And if you add another 10 years on from 1997, guess when the next crash came? In 2007, in the form of a subprime crash, okay, where property prices were overvalued, property values were overvalued, and so finally the bubble burst. And if you add another 10 years to 2007, what do you get? 2017. So therefore, and this year is 2017, and we are now into the month of June, and we haven't seen any drop yet. Now, of course, cycles tells us that there is a high chance of this happening around that time. But cycles have a disadvantage of being very inaccurate. They're not to the point. It can be plus or minus 6 months. Wow. Again, that is really bad. Now, what if it falls in 2018 January? Then we are out. And then we are all thinking that it's going to drop in 2017. And then we just sell off all our stocks, keep our money in the bank, and we wait for the crash, which didn't come, and it comes 6 months late. That is a disadvantage of cycle. So that's where the charts come in and help you. The moving average helps you. The 50 EMA helps you. The 100 moving average helps you. The 200 moving average helps you, because before a market crash, it has to break through the 50, the 100, and the 200. And when it does, you better be careful, because preceding, before a crash happens, it has to break through these 3 moving average. Can you see how important knowledge of the 50, the 100, and the 200? So even if you do not know charts, you just got to draw the 3 moving averages onto your charting software, and you'll be able to know. If price is below that, just reduce positions. And if that happens in 2017, then we got it right. Okay, so I cannot tell you exactly that it's going to happen this year.
Right.
It could happen this year. It's already into 6 months and we haven't seen a crash yet. And put it this way, I'm still in the market because why? It didn't break through the 50 and the 100 and the 200. But when it does, and then I'm going to be careful because I know that at the back of my mind, 2017 is a year of the big bear. Okay. So how do you save yourself from a crash? As I said, 50 moving average is one way. The other way is the TAD. Okay, so I'm going to explain to you how our TAD, turtle, atom, and ducks,
Interesting.
that's right, can, and if they trigger three arrows pointing down, that means you have a sell signal. And if there are three arrows pointing down, definitely it is below the 50 because the duck is the 50 EMA. So you have the three arrows pointing down. If at all there's three pointing down, you just reduce positions. Now we saw that in a handful of stocks, but not the other stocks. So that's why I say caution, stand by, but don't sell first. Okay. In fact, there are also some that are still three arrows pointing up, which is a buy signal, which is the opposite of sell. Now I'll give you an example of how to use this to get out of a stock. So I've here Wintoni. Okay, Wintoni, some of you will know, this has been was a good stock, but then when the Jurong decide to push down, it is a bad stock. And so this was a good stretch of the stock. 8.5 cents they push. Now see how our indicators TAD gave you buy arrow, three arrows pointing up. Therefore you buy all the way from 8.5 cents, but sell arrow at about 34 cents. After you got out, you stay out, and guess what? You have a three arrows pointing down here at 31 cents. And if you didn't get out, see how they dropped to 2.5 cents. And that shows the power of the TAD sell arrows. That before any stock crash, it has to break through the turtle, the atom, and the ducks support line, which is the sell arrows. And that's where our TAD can help assist. And for those of you who are serious, those of you who are serious, to look at it, that this is our system, and you could contact us anytime. Okay, and the telephone number is there.
Yep.
Okay, and you can contact our brother Azul, okay, or Cherry or Amy, who will assist you. And we come to the finale of the day, which is stocks to watch. Now, in spite of all this caution that I talked about, that we should be careful, I talk about the bear cycle, okay, that we should be careful. Right now, there are still some stocks that can go up. And that's the beauty of TAD. It can pick the winning stocks for us. So I'm going to go through a handful of them, 11 of them. But there are definitely more than that. So we just go through the 11 and I'll give you an idea of how we pick the winning stocks. So my secret in picking winning stocks is, as I said earlier, okay, on the Maybank case, okay, of the spot of trend change case, that you don't touch a stock when it is in a downtrend. You don't trade there. You don't trade a stock when it is a sideways. You only trade a stock if that stock is climbing up Mount Kinabalu, which means it's an uptrend. How do you know it's an uptrend? I said earlier how you have a higher high, H2 higher than H1 and L2 higher than L1, which is this. You can see here H2 higher than H1 and L2 higher than L1. Of course, I didn't put the alphabet there, okay? But the beauty is TAD using computers, okay, trading our software, we can scan through the 1700 stocks and flag out the stocks that are trending upwards. And like I said, we only buy stocks that are trending upwards, yeah? This is the scanner that we're talking about, which we have designed, which help you to define trend. Okay? And we only will look at the stocks that are in an uptrend. And to define a stock in an uptrend, it should qualify with three magic buy arrows. The T, the A, and the D. The 30 atom ducks must have buy, and buy arrows. Now I'm going to give you an example in EFOS. Okay, just remember what I said about before you buy, there should be three arrows pointing up. So you look at EFOS at 93 cents on the 18th of March, 2016. We have a buy arrow on the turtle, a buy arrow on the atom, a buy arrow on the duck. So all three indicators give us a buy. That means it's a strong buy call. The second occasion when it did that was at 97 cents, okay, on the 6th of April. And the third time it did that was at 111 on the 28th of April last year. And guess what happened after that? It rallied all the way to 180, okay, and we caught it, okay, at 93 cents, 97 cents, and 111. How much did we make? If you have 10,000 ringgit, you would have made 9,350 on 93.5% in 2.5 months. Okay, that's the power of charts. Okay,
Very nice.
the power of charts and the power of TAD. So let's use this same idea and look at the 11 stocks that I have picked. So these are the stocks that I see at the moment is they are still trending up in spite of the uncertainties that is surrounding us, surrounding the world, surrounding President Trump, surrounding with the Iran attack and with the London Bridge attack and with the Manchester and so much of uncertainty around the world. I know it's important to be cautious, okay, but for those of you who are a bit more aggressive, these are the stocks to look at. So let's look at the first one, which is Maybank. Okay, you notice there. Now we are using two techniques. One is the spotting a trend change. Okay, that is the first technique, and you can see there this stretch is a downtrend that we shouldn't touch. The sideways we shouldn't touch. We should be touching here when you make a higher high and a higher low. And the TAD also gave you a buy. It coincides with the TAD at 795. Just now I put 808. Is even earlier. And you might say, you're telling me so late. Now it's already 9:50. Let me say this. Based on the targeting, okay, the next target is 1025 and 1090. Okay, so it's really up to you whether you want to take that this particular trade. Obviously, it has already broken out of 920. Okay, and it already hit 959. It pulled back a little bit, but it is en route towards 1025 and 1090. So this is the first stock, which is based on a trend change as well as a TAD buy signal.
Maybank.
The next one is Maybank has this diagram as well, which is a trend change here and triggering a buy here at 1795 or 808. So Genting is another one. Notice this chart and the Maybank chart. What's the difference? It's the same. It's a rounding bottom. It starts off with a downtrend, which is supply line, resistance being broken, and then they make a higher high and a higher low. You would have thought this is a Maybank chart. Actually, it's Genting chart. But can you know why the patterns are the same? Okay. Whereas it's different bank, different owners, and so on. Because for one reason, it's paid by the same fund managers, okay, the same Jeromes, and their behavior are recorded in the charts and reflected in the charts. And see how our TAD also triggered a buy around the same area, arrow up, arrow up, arrow up. And notice this is the DAX. There's no down arrow since then. So Genting is still up. It's already now when I did this was before it hit 990. Actually, it already hit 990 once again, and now pull back a little bit. But we expect it once it break out of 990 to hit 1130 and 1222. Genting. And notice this round we did pull out some buy calls on the index stocks for you. And there's one more. Let me see. Post. All right, is another great stock. Like I say, now again, it already broke through a downtrend. Okay, line, and it was a trend change. And on top of that, we also have got a TAD buy signal. Hold on, just show you. Okay, I didn't circle it, but it's around here. So the post already hit around 6 ringgit, and we expect it. Okay, once it break through to hit 724 and 850. So you can see these major blue chips are on the rise. That's why the index is going up. And there's one more, which I didn't put here, Tenaga. It also shot up a lot yesterday. So these are the major heavyweights and Simon. That's actually bringing the index up. Not all index stocks are good. These are the good stocks. Airport is another one. Yeah, the next target is 12:30. TAD triggered a buy here at 7:47. 7:47. Now it's already 9 something, 9:45, and the next target is 12:30. Okay, next. So we're done. Okay, that's a few of the index stock that I have spotted, but there are several others. Okay, but because of a lack of time, I just pick a couple and show you. AYS. Now this is a lower liner. Okay, this is in the construction sector, building materials, and so they're not supposed to be in a very strong uptrend because building materials are not a strong sector. But look, the Jurongs wants to push, they want to push, they push. And notice this started off with a downtrend, then there was a trend change. You notice the higher high and the higher low. And once you break the higher high, you buy at 42 cents. Right now, it's already 60 cents. And it's already broke through the old high of 58 cents. And because it broke through the old high of 58, okay, we expect it to go to 81 and 96. We call this a rounding bottom breakout. And so here you got a case of, if we look at the sector you won't want to invest in, but you look at the stock, that stock is being pushed. And look at that, the volume here reflects the interest. Maybe the fund managers here, the owners, and the price is reacting to future fundamentals, which is, we do not know what it is yet. It is still not known by the market participants, but the privileged people who are insiders, they have got news of it and they are pushing. And we chartists, we go along with the big boys. Yeah? Next one, Sensoff. Now this is and mid cap, small cap stock, so they are in the radar. It is in the radar. Again, same reasoning. It broke through a downtrend line. It then make a sideways and make a higher high and a higher low, and that's the buy area. And that was around here. Right now, it is around here. So if it could go, it could perhaps go back up to even 65 cents. Now this is your first buy signal over here. TAD buy signal. Next, Penta. Penta has been a great stock. We triggered a buy since 145 on the January the 11th. 145 triggered a buy, Turtle, Atom, and Ducks buy. And then notice how many further buys, further buys, further buy, further buy, further buy. There was a sell here, but see the Atom got no sell, the Duck got no sell. You need 3 arrows to sell. 1 arrow is not good enough to sell, so you ignore that sell signal, and it went up again. And then another sell signal, but only 1 out of 3. You ignore that. That means all the way up from 145, it went up all the way to now 385. It is still a buy and a hold. Penta. Next target, based on technical measurement, it is 475.
Interesting.
Okay.
Okay.
Menang.
Menang.
Okay. Another property stocks, it is not in the right sector, but based on the spotting a trend change of a higher high and a higher low, it qualifies. First of all, the downtrend line has been violated, okay, to the upside. You got H1 pullback for the L1. You got H2 higher than H1, L2 higher than L1. Therefore, that's a buy at 91 cents. And today, it went up again by a couple of cents. So where is the next target? 107 and 125. And the whole thing is a rounding bottom. Another good, okay, trend change pattern, okay, due to changing fundamentals. Because fundamentals that you may not even know what it is right now, that cause the fund managers to be buying this. But they are buying this. The first round being 91 cents. Lion Industry is the next one. Now, Lion Industry is part of the steel group, sector of stocks. Now, these stocks are having another second win or third win. That means they are now coming back up again. Okay, they have had a couple of rounds before. But notice how this concept definition of trend change, okay, from spotting a trend change from down to up, can again catch a stock like this. First of all, you have a downtrend line that has been broken to the upside, and you got a H2 higher than H1, L2 higher than L1. This is the point where, okay, the price is higher than H2 and H1. That's a buy point at 51. And see how it just keep going. Right now it's already 125, and the next target is 146. This is just to show you that the power of the definition of trend change. If you know how to spot a trend change, you would have got in right at the ground floor. Okay, right now this is already midpoint to the top floor. Just to show you as an example. Now, let me see if I have got another one more. Got E metal. Notice they are rounding bottoms from a downtrend. They move into a sideways and they make a higher high and a higher low. It's all the same kind of style. See, higher high, H2 higher than H1, and L2 when it pull back is higher than L1. But that's how our TAD is able to help you to spot it and give you confidence to buy, because the turtle, the atom, and the ducks is a buy. And right up to today, yesterday, it is still a buy. The duck is still up there. Everything is still up there. So this is a good, technically strong stock. And you look for the next target, which is 85 and 95 cents. If it breaks out, it'll be 123 and so on. And last but not least, Chuan. Chuan, okay, if you do check, is fundamentally a very strong stock. And technically, we are chartists, and from the spotting the trend change kind of definition, again, it make a higher high and a higher low, and so it is a buy. And that's from this point. H2 is higher than H1, L2 and higher than L1. Can you see that? So there was no buy signal all that way from 2015, 2016. Don't touch this stock, but now it's different stock. And there are several other stocks that are like that. So we are, due to a lack of time, I can't show you more than the 11, but definitely there. But I can do a live demo and just probably if those of you who have got a couple of stocks you want us to take a look, you can type the name of your stock into this chat box, and we'll try to address as many of your stocks as possible. Is it okay?
Right. Yeah? Okay, for those who are listening right now, if you have your stocks, just name your stocks right there on the chat box, and we will go with you shortly. Okay, now before we go through that, what we're going to do is they have a question to Mr. Fred. The system only detect on the daily or can use for the other time frame? That's question number one from Azam. And number two, Joyce Lee asking whether we provide training for those who are using TAD. Do we provide TAD, how to use a TAD? Okay, so Mr. Fred can answer that.
Yeah, okay. We do have a shorter time frame than 1 day daily chart, okay? But for stock market, Malaysian stock market, a daily chart is the most important chart. Let me tell you from my experience, okay, if you go into a period time frame, which is a 15-minute chart or 30-minute chart, most of the time it's not doing anything. It's not going anywhere because Malaysian charts are not as active as American charts, for example, or Hong Kong charts. So do not attempt to go lower than a daily time frame. So in our scanning, we use a daily time frame. And we may, for longer term investors, we would want to encourage to ask you to look at a weekly time frame. Not that the lower is better, but the higher is better. It's for Malaysian stock market. So that's one.
Okay, Brother Azam. So question number two, Joyce Lee say, do we provide training?
All right, that one you can answer for Mr. Joyce, for Ms. Joyce.
Joyce, I just want to share with you, we do provide training step by step, one by one, exactly on how you use the TAD. Shortly, I will share with you more. Okay, so stay tuned with that. Okay, so let's pick two questions right here. You want Mr. Fred to give a comment, so I'm going to go quickly right here. So number one is MBSB by Ellie. So MBSB.
Right. So okay, I'll just pull out one chart, any chart. Okay, in this case, Jack. Okay, and
MBSB.
If you want MBSB, we'll just type MBSB here and double click. Then the MBSB chart come out. That's how easy it is to maneuver this. And notice, okay, in the MBSB case, see how you have a higher high and a higher low. So this is definitely a buy call. TAD. Can you see the three arrows pointing up, which is around 99 cents? Okay, so there's already a buy right now. MBSB is at 131. Now notice at 131, there is no three arrows down, so there is really no sell at all. And the duck support, which is the thick blue line, is 126. So until it goes below 126, there is no reason to worry about this stock. But if it goes below 126, you could consider taking some profits if you have bought earlier. Okay? Now, if you are the longer term, if you say, "Oh, I'm a longer term, I want to know what is a long term view," then you got to look at the weekly chart. Okay, weekly chart, and the weekly chart will give you another reading altogether. Okay, with a target of 156, we can already see from here, but with a cut loss of 121 or even $1.08. So these are the two cut loss areas based on a weekly chart. So in other words, MBSB, there's no threat at all, and you should be holding on to this stock. And you should add further positions only when you break out of the red horizontal line, which is 135. Can you see 136? Sorry, 136 was the high of 2 days ago, 3 days ago. You like to buy further buy at 137 or higher, because the next target is 156. Just now we measured already. Okay. So that's MBSB.
Okay, so
okay?
we have you, Ellie. Next question is from Seoul. Asia X. Bought at 0.49. Please, Mr. Fred.
All right.
The command on Asia X.
Asia X on a daily chart, it is weak. Yeah, already there is already 3 sell arrows there. But on a weekly chart, it is still steady. So, okay, daily chart, it is weak. But the weekly charts, you notice there are no sell arrows, so it's a hold. Okay, but this drop has been very unfortunate, and it has actually turned a buy into a longer term hold. But notice it didn't break. So you got a higher high, but you have a low which is still higher than the low here. The low is 35 cents. That is a very important low. Now the higher low is 39 cents, 38 and a half, 39. Now as an investor, okay, and this is a good stock, right? You got to be tough and be able to hold and not be jittery. And of course, we are chartists, so we still look at the chart, but the weekly chart is saying you hold. The question is whether you yourself is brave enough, okay, and have that tenacity to hold on and have good sleep over it. And as an investor, you should adopt that attitude. Otherwise, you cannot sleep well. Then stock market investment is not for you, or you should not be playing so big. You probably have overstretched yourself, and you have put in more positions than you should have, and so it's worrying you so much because you say please.
Yeah, please. At 0.49 is the entry. It's slightly at the top there. So of course we know.
Yes. So overall, this chart is still not in a downtrend. Remember what I said about the definition of a downtrend: lower low and a lower high. You don't see the lower low yet, right? These are the two lows, and it didn't go below that. Okay, you should be holding it.
Okay, so hope help you. So, okay, last question right here. We're going to pick right here. I'm going to pick a random one. They would like Mr. Fred. Can you comment on front end?
Okay, hold on a minute. Of course.
Front end. Okay.
There are many good stocks today. Okay, front end is one of them.
Peter, front end. All right.
All right.
That's beautiful. Today's
front end. Okay. You notice this downtrend? And then this is a sideways trend. There is a high, pull back, fail retest of the low, and makes a new high. So really, this is your buy area, all the while buy. And over here, you might sell off because of this drop, but you turn back up again, and when it broke through that old high, is a buy, and see how it come down and sort of even gap down, it trapped. Okay, and it's a gap down just like Asia X, it gap down. But then you see how they U-turn back up again to make a new high, and look at the volume. Okay, when the price is higher and the volume is high, that means the big boys are in the stock. Okay, for reasons that they know better. But we know the targeting, and the targeting will be a 1:1, which is about 41 cents. Right now it's 31. So yes, but this stock, because it's shot up very much. Tomorrow might consolidate another 1-2 days. But there is it shouldn't worry you if you are holding on to buy positions. Okay, this is a very healthy stock, this one.
Yep.
But besides Frontcan, there are a few others like Dialog, okay, like Century, okay, like Gtronic, S Cable, okay. So these I Jacobs, ATA, ATTA. So there are several other stocks, PPHB, public packages, okay, they are very good. So I would love to go through all the stocks for you, but
So many.
due to there is inadequate time, I like to now pass back to Mr. Izon. Mr. Izon will explain to you, for those of you who are serious traders and you want to learn technical analysis, you would like to consider us, because we are tied with a joint venture with Asia E University, and we are coming up with a 3 months course, and the 3 months course with Asia E University. Mr. Izon will explain a bit more. We hope you will stay back, okay, and to listen to what Izon has got to say about how this 3 months diploma in technical analysis course can help you all to further your career in this industry. But before that, Izon is going to tell you about how to get a TADSystem for those of you who would like to get hold of the software first. Okay, and the 3 month course comes later. So if there isn't anything more, I am thank you all for listening to me, and I'm going to pass you back to Izon. Please stay with us, okay? And Mr. Izon will share with you more about our TADSystem and our courses.
Yep,
Back
sure.
to you.
Okay, so for
Thank
those
you.
who are interested to get the TADSystem now, I've seen a lot of you right here have so many questions about how to get a TAD, and in fact that you like Mr. Fred to always comment daily if possible. That's what kind of support that you need. So that's why it's very important, and we understand after interviewing hundreds of traders, regardless they're beginners, newbies, and pro, most of them they still need help from experienced trader, especially technical analysis. So therefore, we recommend you to get TADSystem today. Now, for those who are very interested to get TADSystem, now we're going to share with you 8 powerful benefits right here. Number 1 is if you join this program right here, we're going to provide you one of the best charting software right now in Malaysia, which is TADSystem. We're going to provide you that for the next 6 months. The next one is actually TAD template, where you know exactly the buying signal or the selling signal. This TAD template is very exclusive and designed by Mr. Fred and together with SI team and the programmer right here. And the third thing right here that you get is more than 30 videos. Now the question Joyce Lee asking us just now, do we provide you a training? Yes, we do. So 30 videos is waiting for you. TAD stock alert is waiting for you as well. Customer care support is waiting for you as well. Ebooks, hands-out, weekly online live trade session, and monthly webinar. Look, for all these 8 powerful benefits, we talk about this value right here is waiting for you is more than 60,000 ringgit. And remember that if you are a serious trader, if you do not receive any consistent results since for the past 2 years, you would need to consider TADSystem right here. We have so many successful traders using this program right now. So this program right here is actually valued at 60,000 ringgit for the next 6 months. If you get this program today, you only can get this at the price of 5088 with a fraction of the cost. So 5,088 ringgit for the next 6 months. Now,
This includes GST, right?
It includes GST. So for those who grab this promotion, now we have a Hari Raya special offer right here. For those who get this program right here, we would like to offer you 3 exclusive bonus gift from us right here today. So if you sign up this package today, we will give you the TADSystem exclusive bag, book chart pattern analysis, and you get 6-month access to Fred Tam daily newsletter. And this bonus alone is already worth more than 6,000 ringgit. So if you sign up today, 5088, you get the bonus from us that worth almost 6,000 ringgit for free. 3 items right here. bags, the book chart pattern analysis, and the most powerful part right here is the Fred Tam Daily Newsletter. So for those who want to get this TADSystem, all you need to do just go to the website www.tadsystem.net, or if you have more for the question, go to this number 019-220-2022. Okay, now we also have a 3 days course is upcoming on this date. It's going to happen in Kuala Lumpur on the 8th, 9th, and 10th July, which is next month. For those who are very serious trader, we really encourage you to join this 3 days course. You will join with Mr. Live on the next 3 days, learn the technical analysis and also the live trade. And we're also going to have in the August 26, 27, 28 August, 16, 17, 18 September 2017, and 20th, 28th, 29th, 30th of October. You can get this info more at www.f1traderacademy.com. It's going to happen at Renaissance Hotel Kuala Lumpur. For those who are interested to join this 3 days course, you can join this course 3 days course at the price of 7,420. So if you join this 3 days course, you will get TADSystem for free. Yes, you get the TADSystem for the next 6 months as well for free. So you get 3 days course and you get TADSystem. So say for example, if you cannot join the 3 days course, we recommend you just to get the TADSystem online. You can learn everything as well through online. So 5088. But just in case you want to change your mind, what we recommend here is you get the TADSystem first, 5088. And if you want to join the 3 days course, you just top up the balance. Okay, so that's how it works right here. So within 48 hours right here, if you want to get this promotion, quickly sign up right here at our website. Okay, and for those who wish to get an installment payment, for those who want to join the 3 days course, this is the installment package that we offer. If you have a credit card based on this bank right here on this page right here, Citibank, RHB, Hong Leong, Public Bank, we have installment plan for you. You can join the 3 days course with a 6 months installment plan, 1347 only every month, or you can go for 12 months, which is 673 ringgit only for installment plan. Okay, so the next one is if you want to get the TADSystem for your installment plan, we have as well that package. You can take this package right here for 6 month installment, which is 924 ringgit for the next 6 months, or 12 months is 462 ringgit. So for those who are interested, this is the number that you need to call, 017-258-7783. Okay, now let's talk about those who are interested to take professional certificate in financial technical analysis, diploma in STA UK, and certified financial technician. This is going to be a 3-month course. This is very, very interesting course. The question is, who will be the next certified chartist right here in Malaysia? With the big industry right now, there's so many people, as you can see on the news, there's so many people start to open the CDS account, many young traders start to coming in, and we need more chartists right here in Malaysia. Now we prepare you for the exam leading to the diploma in technical analysis from STA UK. So this is the certificate that you're gonna get from Society of Technical Analysis, a well-renowned in international. Okay, so this is the sample of the certified from STA, and also you'll be recognized certified financial technician CFTE from IFTA. Yeah, so this is very, very powerful certification. You will get recognized throughout the world. So this is the Master of Financial Technical Analysis, which is in Malaysia. Mr. Fred is the earliest person to get the Master of Financial Technical Analysis, MFTA, for those who are interested to further your learning in Master. Okay, and the next one is 5 reasons. Now, 5 reasons why take 3 months PCFTA course. So there's a 5 reasons. So reason number 1 is deeper understanding of technical analysis and indicator. Now, if you learn throughout this program, not only that you learn deeper TA, but it helps you in terms of your trading to become the best trader, to become the pro trader, and some say that you can make even more powerful profit right here. So that is the powerful thing when you learn STA with us. So that's number 1. Number 2, you obtain a diploma in technical analysis from world-renowned society, from Society of Technical Analysis and International Federation of Technical Analysis, US. Okay, so when you show the certificate, people will, salute you. Okay, so the next one, number 3, is get employment in brokers, bank, or unit trust company. Big company like Bloomberg, Merrill Lynch, JP Morgan, Deutsche Bank, Goldman Sachs. Look, this kind of certificate, you recognize even the government of Singapore. So this is considered one of the great certification that the reason is you should join the PCFTA. Number 4, you can teach technical analysis in universities, colleges, and even if you have thinking about to help more Malaysian people right here, you can even open your own academy under F1 Academy. Will help you out to set up your own office training course, and you can teach other people if you're passionate to teach in technical analysis. So this is the reason number 4. And reason number 5, if you have interest to become an author, when you get and you see all these 3 books right here, you will be more recognized if you have STA and CFTE. So when you write down, it will be carry more weight towards your writing. So it can help you as well to become successful author, just like Mr. Frank. Yeah,
you want to be famous.
Yeah, you want to be famous, you want to be known. Yeah, so this is one of the great, the 5 top reasons why. So our STA and CFTA exam success rate is 100% passes for the 201 exam, year 2010, 100% pass under Mr. Fred. And you can see right here, Mr. Lau Ting Lam, we have a lot of people right here is actually passing right here. And you can see as well, this is student score 100% passes in STA UK 2015. Okay, under Mr. Fred as well. Yeah. So this is the certification as well. While you're learning with us, we are working together with Asia University and of course F1 Academy. So you are taking the professional certificate of technical analysis joint venture right here with Asia University. So you learn under this branch right here, and is the most powerful preparation for you to go for the STA exam and CFTE. Okay, so what is inside PSC FTA package? So if you join this is what you're gonna get. So you will join us learn for 15 days every weekend. Okay, weekend, Saturday and Sunday. So it's not going to disturb your Monday to Tuesday until Friday. So only weekend. So that's a good news for you. So only Saturday, Sunday. And we also have 4 night classes webinar.
And starting from July 15.
Yes, July 15.
To September 23rd.
September 24th. So these 15 days weekend lectures and 4 night classes via webinar, the market value alone is already 90,000 ringgit. That is the value that you're gonna get. And this is all the syllabus await for you. Look at that. Module 1, module 2, module 3, module 4, look at that. Module 5, 6, Module 7, 8, 9, 10. Look at the Wyckoff method. Oh, look at that. It's so beautiful until module 15. So this is all the modules that is await for you. And the AU and PCFTA lectures will be, of course, number 1 is Mr. Fred Tab, the principal lecturer, and Mr. Tang Kong Huat, the senior lecturer, Mr. Cho Wei Chun, the Elliott Wave specialist, and number 4 is Mr. Nicholas Tan from Singapore. Okay, we're teaching throughout this course. So this is very interesting beginning next month, July. You don't want to miss this to become the next chartist. If you have the intention already right now, you want to become chartist, you better have a look at this promotion right now. Okay, so number 2, you're going to get as well the 6-month daily newsletter from Mr. Fred right here, and it's worth 5,000 ringgit. He's going to give to you as well. Number 3, you get the full package of TADSystem. Okay, you're going to get all the benefit right here. And then number 4, you're going to get the Telegram support, including one of the Malaysian best technical support, which is Brother Azul right here. You're going to get for the next 6 months. Absolutely from us. That's value alone is already 5,000 ringgit. Number 5, you get 3 advanced charting software, which is MetaTrader 4. Elliott Wave, Advanced Stocks Trader. You want to know how to trade in, foreign exchange, gold, index, Dow Jones. So this is going to be interesting, and this value alone is already worth more than 25,000 ringgit. And this is the gross value of this package that is going to begin this July. So PCFT package gross value is 185,000. That is the value that you're going to get. But if you want to register today, this is the promo price, which is 35,000 ringgit, 35,813 for the next 3 months. But if you sign up before 30th June, before end of this month, we would like to give you the bonus right now. So here's the bonus for those who sign up before 30th June. We would like to give you further discount. So before 30th June, the price is 29,355, and you are safe right now 6,458 ringgit. Okay, this is a complete package, PCFTA and also STA and also CFTE. But if in case you just want to learn professional certificate of technical analysis with Asia universities, you don't wish maybe not to take STA and CFTA exam, you can take under this package right here, which is only 23,320 ringgit without the STA and CFTA. So you can choose two package. You want with the exam or without exam, but you're learning a powerful learning right here with us. So this is a joint venture, Asia University, and of course together with F1 Academy. So those who sign up before this 30th June, this is the promo price for you for the 3 months course. So save a lot of money right here. Okay, so without further ado, we're already coming to an end of this program right here. We'd like to say thank you very much for joining our program right here. This 11th webinar, we hope that you learned so much from here. And for those who are interested to sign up more, to know more, go to our website. We have a www.tadsystem.net and of course f1traderacademy.com. Don't worry, we'll be showing this on the Facebook very soon. We're going to send you all the link for your information. So once again, on behalf of F1 Academy and TADSystem,
Thank you.
we would like to say thank you very much. Mr. Fred, do you have any last? All right. Yeah. So on behalf of all, we would like to say thank you very much and join us again next time on the Market Outlook and Stocks to Watch. Bye, guys.